So as we start with our technical analysis, I would like to show you on GBPUSD. I've already marked the main key level is the support and resistance, but I'm not going to use this support and resistance because I'm not going for a swing trade. I'm going for a intraday trading. As a day trader, you're not supposed to, it's not that more important or not that more views like a swing trader. The next thing I want to zoom in, I already have my key level, so I'm going to zoom in and see what's going on recently. So I've already seen a level right here. This fair value gap is quite important to mark, and then I have this candle right here. You know what this candle is? This candle is known as the mitigation block. Mitigation block. I'm going to put it at mitigation block. So the price is likely to come back and hit that mitigation block. So also that I already know that the market has to come back to this area. So what's the market doing right now? It's going for an uptrend. Okay, I've already know that the market is going up. I already have a mitigation block, and right here I have the support line. It's a liquidity, meaning that the liquidity has already been swept twice. So I'm going down to 15-minute time frame. Alright, now after we are on this 15-minute time frame, you can see that the market broke this level and then came back. Now it's about to test again this level right here before heading back up. The first thing I'm going to show you, I'm going to use this Lux Algon session by Lux Algon strategy, indicator. Once I activate it, it's going boom, just like that. I'm going to show you the settings. The setting is simple. You just click the setting icon and you click the setting icon. Okay, so we have the New York session, the London session, the Tokyo, and the Sydney. The Tokyo and the Sydney, it's all Asian session. So I'm going to move the New York session. I'm going to delete it, not be visible. Okay, once the New York session is gone, I already have, you can see 3 sessions. The Sydney, Tokyo, and London. The Asian and London session. Let me come back here. Let's start like from here. Now that we have finished the technical analysis, the second thing we are going to do is the AMD. What is an AMD? So AMD is when the Asian accumulates. After Asian accumulates, then we have the London manipulates, then we have a distribution. The Asian accumulated right here, right there. As you can see, it accumulated. It didn't give a direct, like it's going for a up or it's going for a sale. It didn't give anything. But after this Asian was closed, we had a down move from here. We had this down move right there before the market giving us another direction that the market will be going up. Okay, we had that. that. Okay, as we had that, we knew that we started seeing the reason that we started seeing something that the market is going to reverse from this downtrend. That this downtrend, it was not a real move, it was the manipulation. Now we are about to go for a distribution. For the distribution, we had a fair value gap. We had a fair value gap right there. We had a fair value gap. So after the manipulation was over, yesterday I just put my entry right here, right on the fair value gap, and made a risk to reward of 1:2, 1:3 perhaps. So that's the, yeah, I put my gun box right here, and I made a small stop loss because I was 100% sure that the market will be going up to that level. Okay, that's one reason, that the accumulation, manipulation, and this one here is going for a distribution. But that wasn't all that made me took that trade. The ALA strategy made me took the trade. Okay, let me show you. Let me move this. Allow me to move them. We have this. Let me move them so that you can see what is the ALA strategy. The ALA strategy, I just take my gun box. I mean the volume profile. I take my volume profile. I mark from the Asian, from the beginning of the Asian to the end of the London session. Then I get two levels. The first level, I get 3 level. Okay, this level right here is the value area high, and this level here is the value area low, and this blue one here is called the point of control. Here meaning that there was a lot of trading. Here the retail traders place a buy, but the big institutions and the hedge funds place for a sell. That's why at this zone it went down, and at this zone, as the market was going down, the retail traders press for a sell, but the hedgers press for a buy. That's why this one was a value area low. The value area low is simply as support and resistance. These two, they work as support and resistance. Is if you have already watched my first video, no, we won't be having any issues on that. So I marked this level as my support. You know how support and resistance work. So the market came after finishing the London session. After finishing the London session, the market came back and it broke the level. It broke the level. After breaking this level right here, it went for the fair value gap. As technical analysis or the AMD, I already knew that the market will come back to this level, but the ALA strategy told me to buy at this level, to just place a buy at this level, at this support. And the AMD and the technical analysis, you can see there's a fair value gap right here, and there's an order block right here, meaning I was supposed to place an order right here and put a stop loss below this order block. So they still work the same. So after I put this, after the market came back and tap here, it came back, tap here, tap twice at the fair value gap, and you know what happened next? It came back and tapped the zone, the ALA zone. After tapping the ALA zone, the market went straight, meaning it respected this zone, the value area low. It means it respected this zone and wait for the take profit, meaning the take profit I was supposed to hit. My TP always goes to the value area high. If I'm on the value area high, I'm heading to the value area low, but at this point I was going for the value area high. So this level right here was my take profit. Okay, let me show you. So this is what happened. I went back and after putting my gun box right here, I put my stop loss. After this fair value gap, just slide right there, then my take profit was at this level, because I already know if the market respected this level, it has to go for the value area high. That's the truth. And on my technical analysis, the market was on a bullish trend, so I had no doubt that the market would go at that level. You can see the market simply went direct to that level without hesitating, and then it came back on the same zone and went up again, meaning that this level was very strong, meaning that the level was strong, that this strategy worked perfectly. No, it's not this level, sorry. The value area high is at this level. So as you can see, it still worked. Another thing I want to tell you is that when you use this strategy, do not move your stop loss. You can see clearly at this area. If I had moved this stop loss to this level, I would have been already tapped out earlier. But I just waited, the market moved on my direction, good, then it came back. After coming back to this level, it respected, and then it went up again to my target, and hit my take profit perfectly. Before now, I see now it's like it's want to reverse back. I don't know, I'll check that strategy today. I hope that goes well. As well. See, this strategy, I just used the technical analysis, the AMD, and this other strategy. The one thing I want to add is the BPR. Okay, what's a BPR? That's a very nice question. What is a BPR? A BPR is when there's two fair value gap overlapping. There's a two fair value gap overlapping. But finding you as you can see, the candles are too many. Now if I start looking at, okay, there's a candle overlapping. Okay, now I can see, like right here, this one is a fair value gap. It's a bullish fair value gap, but immediately it turned and having a bearish fair value gap. Now this one is what we call a BPR. This level is very strong, and if you're watching my video, you should be very keen with this level. This level are very strong, so I cannot mark all the levels. I just come here. There's this indicator called the panda clause. If I just click it on and all, you can see as well, this level, they are all shown clearly. Like right now here, I have 2, 3 BPR going for a bullish, and I already have. So if this BPR, like when my take profit, I want to put my take profit like here, then I see like BPR, I'm going to reduce this take profit. I'm going to definitely reduce this take profit and put it somewhere here so that I don't mess up with that, with the BPR. This BPR is very dangerous and it's very good if you know how to use it. I cannot put my take profit right here, and I know perfectly well that there's a BPR in between my entry and my take profit. That's a very big risk taking. So my ALA strategy shows me that I can put my take profit at that level, but the BPR shows me that there's no need. You can just increase it a little bit further, like right here. So like that I can perfectly increase my take profit. As you can see there, the risk to reward is 1:5. Oh man, this week I'm going to enjoy. So I already have a risk to reward of 1:5, and that's two. You have to be very careful, be keen on the BPR. As you can see, the BPR, the market touched that BPR and now is going for a down. There's a 3 BPR, so I'm not going to place on a strategy on that. Okay, let me show you what I'm going to do next. Another thing I want to do is that after this one is the previous one. I've already passed that level, so I'm going to remove this. I'm going to remove this level. Okay, now for today I'm going to do this. For today, mark that level. Boom. Okay, now I have two levels, the value area high and the value area low. The market closed. Okay, the market closed. The market, when the London session open outside of the value area, I call it an invalid setup, but once the market comes back in, what I'm waiting for, I'll just zoom in. For today, I'll zoom in perfectly. I'm going to zoom in perfectly. Okay, what I'm looking for today is that this level, you see this level, I want the market, this candle, to reject. I can see it's already going, it's outside, but I would like it to come back and reject, giving a spike candle maybe, or an engulfing candle after this candle, or giving me any other candle, but a rejection candle or a reversal candle, so that I could place a sell for today, and my take profit will be at this level, but as you can see, we are on a bullish, so the market most likely it might do this. The market might come back and bounce and head up, because the support can change to a resistance, and the resistance can change to a support. That's all, guys. If you really enjoyed this video, smash the subscribe button to make me make more videos and guide you through the technical analysis and more, and AMD and ALA. If you have any question, please place on the comment button and I will reply to you directly. Thank you for watching this video.